All right, let's head straight to the capital market now. The Nigerian exchange equities market closed bearish last week. The benchmark index depreciated by 2.08% from 54,000 to 132.34 points to close the week at 51,893.94 index point, while the market capitalization followed suit to close at 28.26 trillion naira. Now, this brought the month-to-date performance of the market to negative 4.31% and a year-to-date a gain of 1.25%. A total of 1.5 or 1.05 billion units of shares valued at 10.05 billion were traded last week across 16,000 deals on the floor of the exchange. And we have the inflation figure on board. So how is the market likely to react to that numbers this week? That's the big question. So let's get talking now. I'm Brosomodian, Chief Research Officer, Investor Consulting Limited. As usual, joins us now. Thank you for joining us. Good morning to you.
Thanks for having me.
Yes. Let me ask you, before the inflation figure at the weekend, so the market was flat, but we get to inflation. How the market is likely to react now. Yeah. I know you will always say that when the market is down, that's the very good time to take position now. But there was a huge loss, over 2%, loss last week. Are you still on the same position that it is time again for investors to take position?
Yeah, actually, if you look at the market performance for the week under review, I would say that it's a bearish market. 4 days trading, short period of 4 days. So how they only just is like a gain of 0 point something one for the 4 trading days. Actually, we saw that the sell-off in the share of Airtel put the market further down to lose about 2.08 for the week. And that's been an extension of almost a 5 trading week of a bear run. So this is a serious time that if markets have corrected by almost 5 weeks, opportunity is being created in the market for those that are designing in nature. And also don't forget that as from around the March 17 or 15, that's when market start this correction to last week. It tells you that yes, market has gotten to a level you need to also correct. An uptrend market will not continue. There's a level that will call it a technical analysis overbought region. That will come down to oversold, where people can also start taking position. But in all this, there's still opportunity. People are still making money when the market is correcting. A bear market does not mean that market investors will run away. It creates opportunity for you to buy low, especially coinciding with earnings season where dividend is being announced. Last week on Friday, we saw the result of GT Code declaring 2.80 kobo dividend. That same week we saw
UBA as well.
So GSK, UBA of first quarter. So GSK declared 55 kobo. Industrial medical gas declared 40 kobo. You can see any that that dividend is still coming in.
Right.
But the Q1 that came from the financial sector for last week also, it's a sign that those companies have started in a good note. So the one from UBA, the one that came from UCAP, these numbers are not a bad number to start a good financial year if they sustain it. For me, it's a good one. But investors at this time, I know that here they'll be looking at this is also a transition period of a new government, old one going out, new government. What will happen is that is why you can see that many of investors are sitting on the fence or on the sideline to watch. But for those that are risk takers, are still making money. Look, for example, now, like you said, the last meeting we had, the master class was held on April 1st. Some thought that will recommend for having like 40 to 35% in less than 2 weeks. If you're in that position, you have made money. And people are thinking the market is in red. It's about you as an investor taking decision and also doing it with knowledge. It's not just getting when you understand why you are buying a stock, you buy with confidence. I tell you that is why training or education, investment education, build investor confidence. That's why I encourage that the regulators and all that is involved, the operators should do more of education so that we see investors in Nigeria doing that investment and that they won't be panicking to rush. And that's why I said, for me, even the market is correcting, it's an opportunity for people to make money. There's no cause for alarm. All you need is invest in stock. Also, look at what is happening. You just mentioned about inflation figure. In an environment where inflation is high, there are sectors that are going to affect seriously, while some sectors will not get much. You as an investor, it's time for you to be designed to know which sector will this inflation hit with high interest rate. You can see that almost since May till last MPC meeting, we are continuing to increase interest rate. We have not seen impact on inflation. That means it's the time for the central bank and its team to think outside of what hiking rate. Now, if you want to hike rate in your next meeting now with another 50, that is almost 18 point something percent. Then you are pushing your your private sector out of this business because cost of funds were high. But whilst banks will be happy because high interest rate will mean good for them.
All right. Let me quickly come in. If I get it correctly, that in a bear market, there are quite a lot of opportunities. That's when people should see opportunity. Investors who know what it is
do. It is easier.
Should see opportunities
it is easier
in a bear market.
It's easier for when market is trailing. Everybody can buy stock and make money. But in a bear market, it's who that has knowledge of the market. That's why I say education is key at this point. So you know how to take. But in this bear market, people are still making money, as I said earlier.
Okay, we'll get to that again. But let me quickly ask. Give us your outlook for the week. I mean, we've seen inflation figure, coming up at the weekend, more than 22% from the previous of 21.91%. So, how is market likely to react to that?
For me, like you remember about Tuesday, I said the market is on this mood because of what pressure on the market. Why?
Right.
I call it a tension between the yield, interest rate, and inflation. These are the things that are causing flow of funds. Now that inflation has kind of edge up again or inch up again to about 22.04, it tells you that this is the 18 years I was seeing inflation in Nigeria, and also interest rate is almost at 18%. Then what yield will we be looking at to compare to inflation? As we speak now, the latest what we call a Treasury option, the highest for 364 days was 14.7. And why inflation is already at 22.4, you can see the margin there. Then if you are in that environment, in that space, you are still having a negative return. No matter how impressive it is. Even though your bond market, you're having 15 to 16%, you are still negative. But because of incoming government, there is possibility that there will be rate crash. If happen, those in fixed income also won't be happy. Well, wait, I'm coming. Let me finish.
Okay.
And at this time, we're also seeing yield was high, interest rate is high, inflation is high. Then for you to balance this, like I said now, there are some positions that will just enter less than 2 weeks, we have made 36%, which is above inflation. No return we can do that in fixed income. It must be at a time. That is why in equity market, it's the time of reason we are taking the time frame to make good return ahead of inflation. But if you are growing your money with inflation in equity market, as inflation is going on, there are some companies that benefit from inflation. Those companies will post good number. You now enter that. You also begin there. But while you are putting your money in fixed income, at the end of the day, inflation will erode the value of your fund. But for you to protect your fund, you play in a market where you have moderate return with what is inflation is.
Well, if you compare the yield, which is at 14%, like you said, and compare what you get in the equities market, which of course it's not more than 10%. In a good case, let me put it that
actually.
So how do you
hold on? Yes. Actually, equity can gain 10%.
Yes.
Yeah, if you are in a stock for less than 6 months, in a year, I think a year for what? For 14.7 in Treasury B. If you are designing and you have insight to trade the market, you can make more than 14%. But you can even make more than inflation double. I tell you now, in less than 2 weeks, stock are returning about 43%, other one return 36% from April 1st to yesterday. Till today, sorry, as market open today.
Yes.
You can see, for me, is it up to 2 months? Is it up to a month? You have beat inflation. It's about you knowing where to go. That's why I said, the fixed income market is becoming attractive.
Right.
I know that it will cost flow of funds to leave equity market to where around, but with inflation also going high, it's also a threat to fixed income market. But I know generally inflation is not good for any investment. But where can you grab inflation that you are closer or ahead of inflation? You can see it
because that's where I'm going to say where exactly. I mean, it's not all the sector that you can actually take all of that. Okay. So if you have to play smart as an investor using investment education, to navigate the volatile market that we're seeing, since we have inflation figure at hand. So which sector would you say has been up on the upbeat, so let's say upward trend? Let me put it as we wrap up now.
Actually, as we are seeing inflation figure on
and I want you to also add, I mean, how is the week likely to play out?
Okay, as we are looking at inflation figure,
yes,
for those that are manufacturing sector with the high interest rate, they are knocked out already. Go and look at their top line already. It won't get you to that because they are pushed to the corner already. Even the people purchasing power is low. That means, but there are some service sector that whether you have money or not, you need their service. And also, whether inflation is there, they are still making money. It's as an investor, look at those service sector, and also those companies that in a sector that they are peculiar, that no matter what happens, they still demand for their work, for their service. As we speak today, whether there's increased rate, even call rate, that you need to call because you don't want to go to Abuja, you want to fly to Abuja. That means there are some services that you need. Then also look at the banking sector. Yes, the banking sector, because of inflation, high interest rate, you can see it also reflecting on their interest income that they are benefiting from it. For me, these are sectors that we're looking at this time. All those servicing sectors where we're looking at what is happening in aviation service sector. No, look at service sector. What is happening? Because there they spend less. But when you are in the manufacturing sector, where you are in production, when you are, you need more money to, because now cost of diesel is high, and we are going. If finally we remove subsidy, there are sectors that are going to suffer from it. For that, you should know what I mean. For me, investors should not panic. Just like you just said, know where to put your watch, to put your tent. Okay. And also for the week under review, for the week in view, I believe that now that we're seeing inflation figure, we hope to see continued reposition of a portfolio because of inflation figures. Where we look at for that, we have to expect this oscillation of volatility to continue for the week until we finally see the new government. But between now and then, market will remain. But in between this, there's still opportunity to remain market. I think that whether the market is down or up, there's uncertainty.
Okay, take advantage of the opportunity or the bear market, to take position in the market.
Exactly.
All right, still to come after the break. Nigeria's inflation rate for the month of March hit 22.04% for the third consecutive month, despite monetary policy tightening measures by the Central Bank of Nigeria. Well, that's our next talking point after this break. This is Business Breakfast. Please stay with us.